Deutsche Bank. Now, this is one of the interesting European players. It's Germany's largest. Very big player in investment banking, which means mergers and acquisitions, financing, business transactions, forex, that kind of thing. Obviously headquartered in Frankfurt in Germany. It's the biggest player in Europe, and it's also got substantial exposure in the United States of America as well as in Asia. Market capitalization is only $20.72 billion. That's not very much, and you'll see the share chart. It's been on a long and sick road downwards. Not currently profitable because of write-offs in the prior quarter. It didn't pay a dividend now, but if you go back in time, it's got a historic dividend yield, if you annualize some of those other numbers, of around 4.8%. I don't know if that's right or not. But it's in a world of trouble. Why?
Yeah.
What's going on with these guys?
I think this is just following on from our discussion, is really everything that's wrong about global banking. They've got too disparate. They got fined on a number of indiscretions, part of the global financial crisis, and beyond that. They are quite heavily involved in fixed income trading, and that sort of goes through cycles up and down. Recently it's been in the decline, and they're really needing to shore up their balance sheet as well. Their capital adequacy was a bit low, hence the reason they cut the dividend in order to preserve capital.
So they're being told by their regulator, which is the ECB, that they need to have more capital, which means they're going to have to come to their shareholders, which is not a very enticing prospect at the current share price level, or they're going to have to issue bonds of some sort. Let's have a look at the share chart, because when I say it's had a negative 5 years, this is the New York Stock Exchange listed dollar ADR, I guess, and you can see that's a 5-year chart. That's not a very happy image, no.
Yeah, so and they're somewhat in crisis mode, I guess, that they're having to cut costs significantly. They've announced 6,000 job cuts. They're looking to sell off parts of the business. For the record,
they've got about 100,000 employees, I think, or they used to, across 70 countries. So cutting 6,000 is quite a big chunk. And
they're also looking to reduce the technology costs and reduce some of those technology headcount as well. So, and really, selling some of the businesses. They're looking to IPO the post-bank business and split up and shed and really slim down. Their return on equity is only going to be between 2 and 5%, to give you an idea, and their medium-term target is 10%. So they've got some way to go in terms of reducing the capital base and increasing the profitability.
So I remember the gung-ho sort of 80s and 90s where Deutsche were really a leading player. They bought their way into various markets, including South Africa. They had some of those sort of swashbuckling German quintessential banker types like Joseph Ackermann as the CEO. Then with the crisis, like everyone else, they got a little bit of a hiding and pulled in their fingers. Since then, there have been 2 iterations of management. Yes. Anshu Jain and his colleague, the co-CEOs, they're out. There's a new guy who looks like a Brit who's coming in as the CEO, fluent German speaker. He's been with UBS, I think, and he was at Temasek. So you get the feeling maybe that they just sort of flailing around trying to find their mojo again. Yeah,
so I think that, as I said, they're really needing to reposition themselves, reimagine the business. They're under John Crine, the new CEO. They've announced a significant restructure. He was instrumental in, I think, the dividend cut, and the market has seen that as positive overall, because really looking to rebuild the business. I think in terms of the brand and the bank, it is a great global name, and it needs to, I guess, rediscover its former glory.
So what else to say? I mean, it doesn't sound very hot in the first instance. Sounds as though they're going to have to do quite a lot of work first before the base is reset and there's some earnings progression from there. So it's an example to those people who thought, oh, well, you can now buy the banks en masse because they're all going to rebound profitability and so on, that this picture is not nearly as straightforward. You still have to be very specific.
No, I think there's a lot of work to do and a sort of long road to travel still.
So not hot on that one. Okay, good.